So hello and welcome back to our YouTube channel everyone, and we are back with another educational video. So as of now we have given you very different strategies to trade in the market, and also have taught you some price action things and also some really good indicators which you can apply to select when to buy, when to sell, when to enter and when to exit. Apart from that, we have also taught you how to do the stock selection, which stock should you apply your strategies on, how to select the stocks. Okay, now you know that okay, this is a strategy, I have to apply this, I have the rules of the strategies, and I'll be buying and selling the stocks based upon this strategies. Now on which stocks should I apply those strategies? We have shared those videos also with you. After that, we moved on to tell you the another important thing, that is how to use the trading platform. There are a lot of things like you have to apply the strategies, you have to mark a lot of things. So we have taught you that also. Now, one more thing is really important while trading, and that is time. Someday you might be using a strategy. A strategy specifies at what period of time what should be done. Some strategies does not, but indicators never tells you the time, which time is for trading is best. They'll never tell you. Most of the strategies also not tell you which time is best. Some of the strategies that we have shared you, in that we have told you the time, but in other strategies we have not told you the time. But time is a very important aspect, and reason behind is that if you are going to take a trade, you need some kind of volatility, you need some kind of liquidity, you want volume to be good in order to your trade get executed. Suppose if you are sitting at a level, your strategy, you have applied your strategies, you know I have to buy this particular stock above this particular level. Suppose here we have a stock of Hindalco, right? And I thought that I would buy the Hindalco above certain price, say 390, and I'm waiting now for Hindalco to go above 390. It went above 390, I bought the share, but now my target is 400, but it is not achieving. Everything is going right, my strategy was completely right, I have studied the charts very well, still my trade is not getting the target. And the biggest reason for the trade not getting the target is that there is no liquidity in the market. Nobody is buying that particular stock at that particular point of time. That's why your trade is not getting executed. Prices will rise only when people will be interested and when they will be buying. It means when there will be liquidity, there will be volatility in the market. Only then it is possible that your target will be achieved and there will be a momentum in the stock. What we do, we miss out on that. We don't think that it is an important part for a trade. We just ignore it, and then what happens? We take entry, trade does not get executed. We think that indicator was bad or our strategy was bad. We need to update some few things in our strategy, or we need to update few things in our particular indicator settings. After that only I should take trade. So sometimes you are wrong. Might be your indicator is not rightly working. Yeah, that can be true. But the second thing that can be true is that your timing was bad. You should also be very aware of the different timings of the market. At what timing volatility will be there, at what timing volatility will not be there. So for experienced traders, they have very selected bunch of stocks. They know that these stocks I have been trading for years. I know a lot of things about them. So in that case, if you know about a particular stock, that how it reacts, what are the timings that particular stock have momentum, go ahead with that. You know the times where you have won the trades in that stock and where you have lost the trade in those stocks, then there is no problem. Go according to your experience in those stocks. But right now we are going to talk about in general what should be the time that you should select, what is the right time that you should take entry, and what is the right time that you should exit the market, and what is the right time for intraday traders, for scalpers, for swing traders, and for the positional trader. There are different type of traders, and there are different type of time, different kind of volatility they need to enter in the market. So first of all, let me talk about the positional traders. Positional trader take trades for at least a month, or I will say 20 days. If you are an option positional trader, then if you are a positional trader who trades in options, you create positions, you buy the options or futures on CNC, then I think you see the 20 days or 30 days momentum. You wait for some indicator, then you can wait for some indicator to indicate you that yeah, there is going to be a momentum in the a particular stock. We have told you momentum strategy, so positional trader can just avoid this video, because in this video we are going to talk about only intraday traders and scalpers, right? So now, intraday trader, first, the most important time of the market is opening. It is from the 9:15 to I think 9:45. Okay, the volatility in the market will be very high. The volumes will be very high. You'll see in second prices here and there. Let me show you on this Hindalco chart that the market opens on the 9:15 at 390, and within 15 minutes it made a high of 397, means a high of more than 3%. Almost 2% was made by Hindalco in just a span of 15 minutes. Means the market was very volatile. And also you can see downside here, the volume bar. This particular volume bar you can see and compare it with the others. It is the longest volume bar, which means the volume was more, which means the volatility was more, the liquidity was more in the market. So this is a time where volatility is very high, and this is a time where the beginners who have just entered into the market, who are learning, who have spent 6, 7, 8 months, only 6, 7, 8 months in the market, should completely avoid this particular time. Because after that also you can see that this candle, which started at the 9:30, also you can see volume is good, and then you can also see that in this candle market has opened at 397 and has closed as 391. So almost the gain that we had in the first 15 minutes are gone now in this second 15 minutes. So you can imagine what kind of volatility is there in the market in the initial 30 minutes. The gains were made and they were just gone in the next 15 minutes like a flip of finger. You will not even realize when the profits were there and when the profits were gone. You just went to take a coffee and all the profits are gone. So this is the thing. That's why I'm telling you, the volatility is so much in the market in these initial half an hour or initial 2-15 minutes candle that beginners should completely avoid, because I will mark this time frame or this time zone particularly for the intraday as very volatile. Not just volatile, but this is very volatile. And if there is some pro player in the market, then you can definitely go ahead and apply your strategies. Even we have shared some few strategies in which you have to take the trade after 5 minutes of opening the market. We have also shared a strategy with you. You can go and check out that also. But in that video also I have mentioned that this is for some experienced players, some players who have at least experience of 1 or 1.5 years in the market. So I will go and say the same thing to you again, that just the beginners, the people who have just now entered the market, please stay away from these initial volatility times. Okay, now the second part of the market starts I think at 10 o'clock, and I believe it goes on to till I think or you can say from 9:45 it starts and goes to 10:30. So here you can see at the 10:30 market is volatile. You can see market is volatile. A red candle, again a green candle, again a red candle, and again then this red candle you can see very downfall. So volatility was there. Then again after some time, after 10:45 you can say we have a stable market. And here on this timeline, as you can see, the volatility was good and the volume was also good. Scalpers play their most of the trades here only. They will use a 1 minute, 3 minute, 5 minute candles to mark the support and resistance and take a trade. Here they'll take a short trade, here they'll take a long trade, then again a short trade. So like this, scalper trades around this time in the market most of the time. That's why and scalping is a game of experts in the market. So again, beginners can take trade, but don't take trade with very high stop losses. Okay, and then after that we can say stable market starts. As you can see, the volatility was good, momentum was good, then the market was stable. It was rising for quite a few times, like in 1 hour, 4 candles in the uptrend. So quite some hour the prices were rising. So here beginners can easily apply their strategy. They can trust the indicators and they can take the trades. And after this, after 11:30, you can see a consolidation we have seen in the market till 12:15. So this is the time. This is the time for the opening of the global market. The London exchange and all opens up at this point of time on the day. So that's why market starts getting consolidated, and once the global market opens, and then our market also reacts based upon that, and then you can see just after the 12:15 opening of the markets, and here you can see at the 12:30 the candle we have seen. That candle started at the 12:30. I think exact London Stock Exchange open exactly at the 12:30, and the 12:30's candle you can see is quite a big candle comparing to these candles. Okay. So again, volatility in the market comes, or even I will say that volatility is good in the market. Again, you can see scalpers role started. Okay, after that for quite a few time, again some sort of consolidation we'll see, and then again volatility will start seeing. So this is a good volatility on the 15-minute chart. That look at this market price is going up for half an hour, then again 15 minutes coming down, and then again 15 minutes going up. So this is how market operates. Okay, so for the vigilance who have a good amount of experience in the market, they can trade at any point of time. But for the beginners, I would like to suggest that the time after the initial 1 hour of the market, up 1 hour, 1 hour 15 minutes of the market, till the pre-opening of the global markets, that's the best time to trade for the beginners, because there will be a little bit of momentum, and but there will not be much volatility. The volume will be good, not bad and not very good, but volume will be good. So you can take your trade with a small stop losses, and you can learn in the market. And for the experts in the market, you can trade at any point of time. For scalping, the best time is after the initial half an hour of the market. That's is considered to be the best time for the scalping, or at the end of the market. And for the people who take trade for some big profits, they need highest volatility just after opening the market and just after the opening of the global markets. So both these times are good for them. So I hope now we are very clear as to who can take trade when. So I hope it is very clear now. So thank you so much for watching this video, everyone. Please do like this video, share this video with your friends and family, and don't forget to subscribe our channel. Thank you so much.